It's my honor to present you the Head of Trading, Taiwan Futures Exchange, Mr. Ted Tong. Please give your most welcome to him.
Good morning, ladies and gentlemen. I'm Ted Pan. I'm currently responsible for the trading department of Taiwan futures market. It's my great pleasure to present to you the new policies and new products of our company. I'd like to thank you all for coming here today. As a result of the subprime mortgage crisis and the subsequent impact on the financial world, the global stock market dropped by around 30% on the average. And our stock market certainly among them. As the economic cycle moves to another session, together with the downturn of the market, using derivatives to hedge risks and increase your investment returns is essential today. According to the statistics, as of July year 2008, the trading of the indices products of our market is ranked number 3, just next to Korean exchange and Osaka exchange, among other Asian markets. In terms of indices options, TAIFEX is ranked number 2 next to Korean. For most international financial institutions managing global portfolio, Taiwan futures market is really an important market that cannot be ignored. Today's presentation is going to cover 4 parts. First of all, I'm going to start with a brief introduction of Taiwan futures market. Secondly, I'll be focusing on the new policy that are going to be launched in the next few months. And after that, Mr. Alan Lin from our clearing department will cover the rest of the topics. I hope all of you leave this room with a better understanding of the Taiwan futures market. Now, I'd like to turn to the introduction of the Taiwan futures market by telling you some of the important milestones on the TAIFEX. Then we are going to look at some of the facts regarding TAIFEX trading statistics. We hope to give you a more understanding of the product lines and the market status. TAIFEX was established in 1997 when our futures trading laws was promulgated. During the past 10 years, we have launched 8 index products, 6 index options, 2 commodity futures, 2 interest rate futures, and 30 stock options. They are TAIX futures, electronic finance subsector index futures, mini TAIX futures, TAIX options, Taiwan 50 futures, government bond futures, 30-day commercial paper interest rate futures, sector index options, and so on. Beside the main index products derived from the securities listed on Taiwan Stock Exchange, TAIFEX is dedicated to offering various products to meet investors' diversified needs. In March 2006, the US dollar denominated gold futures, US dollar denominated MSCI Taiwan Index were launched in October year 2007. We launched non-electronics and non-finance sub-index futures and options, and another equity index futures and options based on the the other stock market, we call that Great Thai Securities Market. In fourth quarter of year 2007 and first quarter of year 2008, TaiFax implemented some new measures, such as spam margining system, margining for future spreads trade, market making for futures, future calendar spread, and margin reduction for day trade, and anti-dollar denominated gold futures, acceptance of multi-currency as margin deposits. Due to the new measures and new products developed in late year 2007 and early 2008, our market has had a substantial growth this year. The growth rate of the trading volume so far was around 18%. In the fourth quarter of year 2008, we are going to reform some of our trading and clearing mechanism layout, institutional hedging account, adjustment of omnibus account, block trading, collaterals as margin deposits, expanding span to end clients, modification of the final settlement day, cash settlement of stock options, and early next year, new products like NTD Gold Option, Single Stock Futures, and NTD MSCI Taiwan Index Futures will be launched subsequently. More details about these reforms and new products will be discussed later. We believe the introduction of the new measurements and new products can increase the market liquidity, save the trading cost, and enhance the market efficiency. Let's now turn to the performance of TaiFax. This is the chart of our growth pattern in the past 10 years. The trading is not that active during the first 5 years since its establishment. The trading volume of TaiFax was only about 1 million contracts in year 1999. However, the market has grown steadily over the past 10 years. The annual trading volume was over 140 million contracts in year 2006 and was more than 150 million contracts in year 2008. Now, the accumulated volume up to September this year reached 103 million contracts. We expect the market can still have a steady growth this year to reach a number of 134 million contracts of trading. Now, let me compare our market with our stock market. The stock market in Taiwan has been famous for its sound liquidity in the region for long. Up to this July, the listed companies in Taiwan stock market were more than 700, and the market capitalization was about 17 trillion NT dollars, with an average daily turnover of more than 120 billion NT dollars. Now, there are more than 18,000 foreign investors participating in this market. They own 31% of the total market capitalization of the market. I'd like to draw your attention to this chart. In terms of the trading value, the ratio of futures market to the stock market was somewhere between 50 and 90% in year 2006 and year 2007. However, since January year 2008, the ratio has been over 100% and has gone up to a record high of 125% in July. This implied this implies that our market becomes more popular for many investors to use the products of our market as hedging instruments for their portfolios. Okay, this is the chart of trading by products. Over 95% of the total comes from the index-related products. Our flagship product, the TAIX option contract, ranked number 2 in the region, accounts for 71% of the total trading. Second to TAIX option is TAIX futures, which makes up around 12% of the total market trading. Compared with the SGX MSCI Taiwan Index Future, which is also based on our local equity market. The Taiwan Futures Exchange surely provides a more comprehensive index product lines, and in particular, TAIFAX has a liquid options market that facilitates institutional investors' strategic trading and hedging activities. At this point, let's take a look at the market participants. As of this September, there are 38 FCMs and 62 introducing brokers. They together have more than 1,000 branch offices in total all over this island. The widespread brokerage house network attracted a great number of retail investors into this market. In addition, there are 38 proprietary trading firms, in which 33 of them are market makers. They help providing liquidity to this market. Among those FCMs and proprietary trading firms, 34 of them are clearing members. Moreover, there are also 27 CTAs and 9 CPOs in our market. They provide advisory and pool operation services for our investors. This is the chart of the investors of this market. As I have just mentioned, the widespread outlets of the brokerage house make the order placement convenient for retail investors. Therefore, in the early times, just like the case in our stock market, the major part of the investors of future market was retail investors. In 1999, retail investors took up about 94% of the total market trading. However, their market share has been gradually decreasing to 36% due to the increasing participation of both domestic and foreign institutional investors. As our market attracts more and more institutional investors, now the market share of institutional investors has grown up to 63 or 64%. Now, let's take a look at the new policies for trading. There are 3 new developments about the trading mechanism recently. First of all, the new position limit exemption will be imposed by introducing the institutional hedging account. Secondly, position reporting frequency of the current omnibus accounts will significantly reduced. Finally, we are planning to set up the block trading markets for our investors who has the need of trading in large amount. All these will be initiated respectively before the end of this year or early next year. According to our current rules, position limits have been set for both individual investors and institutional investors. Presently, the position limit for institutional investors is set as 10% of the average daily trading volume or the average daily open interest volume for the previous 3 months of the market. For retail investors, it's 5%. However, only the institutional investors are allowed to apply for exemptions on the hedging purpose. The position limits can be raised up to 2 or 3 times of the original level for up to 6 months or 2 years. There are some drawbacks of the current rules. The position limit exemption is still subject to 2 or 3 times of the original level, which sometimes cannot meet the hedging needs of those who has a large holding of securities in our stock market. The application has to be made again every time when their hedging needs arise due to its securities position change or when the exemption gets its expiration date. Let me adjust. Okay. In order to simplify the application procedure and fully satisfy investors' hedging needs, now we have set up rules for institutional hedging account. First, a distinction is made between ordinary account and the hedging account. The institutional investors can own hedging account and the ordinary account as well. The position limit of the ordinary account will be subject to the criteria set. The position limits of the ordinary account will be subject to the criteria set out in the applicable trading rules, while the position limits on the trading account will be calculated on the basis of the market value of the investor's securities holding, so as to effectively manage the hedging account. Investors are required to disclose the equity holding position to the exchange. Next, we are going to talk about the principle regarding the proposed change. The position must be netted in short position, and the market value must not exceed the total market value of the underlying securities. For example, the combined market value of all equity of futures and options must not exceed the total market value of the underlying stocks. And the net market value of a single stock option positions must not exceed the market value of the trader's holding in the underlying stock. For interest rate related contract limits, the net value of 10-year government bond futures positions and 30-day commercial interest rate futures positions must not exceed the market value of the trader's holding in the underlying bonds and commercial paper. This is the basic rule for the hedging account limit exemption. Moving to this slide, I'll elaborate on the calculation of the market value. The market value of the futures contract is equal to the settlement price times contract multiplier times numbers of open interest. For option contract, market value equals to the underlying index times contract multiplier times delta times numbers of the open interest. After the above calculation, we have to sum up the net position. The aforementioned delta value will be announced by the TAIFAX every day after the market close. The TAIFAX will disclose the delta value on its website. They will be used to determine the following day's position limits for the hedging account. The market value of the equity position will be provided by the Taiwan Depository and Clearing Corporation. Once the TDCC, the Taiwan Depository Clearing Corporation, received the applications of the holding disclosure from investors, it will transmit the data of the market value of securities to TAIFAX. For market value of government bonds, the disclosure of them can be provided by the institutional investors agent or custodian bank. Now let's talk about how to apply for an institutional hedging account. First of all, the institutional investors have to apply to receive cash market data from the TDCC. The TDCC will charge the annual fee of 12,000 NT Taiwan dollars. Then the investors should ask the FCM to apply for the consent from TAIFAX on behalf of the clients. TAIFAX will provide some subsidy in terms of the cost. For example, the application fee of the aforementioned 12,000 NT dollars charged by TDCC will be paid by TAIFAX for the first year. And secondly, the trading and clearing fees occurred in the hedging account that we charge to the FCM will be 50% off until the end of next January. Third, the surcharge regarding the position transfer from non-hedging accounts to the newly opened hedging account will be free. By the way, the transaction tax has just been reduced from 1 BP to 0.4 BP. The trading cost in Taiwan futures market decreases significantly. Therefore, we welcome you to open hedging account with us right away. By way of the setup of institutional hedging accounts, we believe there are many benefits for this market and investors as well. First, the rules now divide institutional investors' account into two types, the hedging account and ordinary account. Our market would like to fully provide complete hedging functions for investors. With the opening of hedging accounts within the range of the securities holding, investors can trade as many as they need to meet their hedging purpose. We also believe that the establishment of hedging account can expand the market scale, increase liquidity to the market, and eventually enhance the market efficiency. Now I'm going to talk about our plan for the relaxation of the current rules for omnibus accounts. There are two ways for foreign investors to access our market. One is the direct account. Direct account opening can be done with the local FCMs directly, but the investors must have a local agent and a custodian bank for the account opening and for those matters related to settlements, clearing, and margin deposits. The other way is to use the sub-account under the omnibus account owned by and overseas FCM. The omnibus account provides an easy and convenient access for an overseas FCM's clients. They don't bother to seek for an agent or custodian bank in Taiwan. So far, there are 20 overseas FCMs that has opened a total of 31 accounts, and now the omnibus account participation amounts to some 17% of the total foreigners trading in our market. The omnibus account provides an easy access for foreign investors to participate our market. Nevertheless, a daily reporting of the position is required for every sub-account under the omnibus account. Furthermore, the sub-account is still subject to the ordinary position limit. The owner of the omnibus account has a responsibility to report its client's position to the exchange every day. This surely causes a lot of processing workload for omnibus account. We are going to reduce the reporting frequency. The proposed reporting frequency will be changed from daily to monthly, and the reporting date will be the third Wednesday of every month. There is a threshold called daily large trader reporting level. If the net amount of the daily buying and selling hit the aforementioned level, then the account holder should report the information to the exchange accordingly. We expect that the change of reporting frequency and the larger trader reporting modification may reduce about 90% of the quantity of the current reporting made by the account holder. By simplifying the reporting procedure, it will definitely ease the loading of account holders' reporting jobs and enhance the reporting efficiency. As everyone here has already known, most markets provide additional trading market for block trading or large amount trading, in addition to their regular trading hours. So does our local stock market. Our Taiwan Stock Exchange already has many trading sessions for block trading that offers investors a convenient channel for large amount trading, so as to satisfy the institutional investors' need for large amount trading, to reduce the impact of large order on the price, and to be in line with international market practices. We are now planning to launch a block trading market to our investors soon, probably early next year. Now, in our regular market, there is a maximum quantity of contracts per trade. That is, it cannot exceed 100 contracts for futures and 200 for options. Our proposed block trading rules requires the minimum number of contracts in order should be 101 for futures and 401 for mini TAIEX. And minimum number of contracts for options is 201. If for stock options, 101. In the proposed block trading system, the price, quantity, and contract are negotiated, specified, and agreed by the buyer and seller, and then the designated FCM on behalf of their clients enter the paired orders to the TIFAX system. There are 4 trading sessions in the block trading market. They are almost the same as our stock market. First session starts from 8 to 8:30. The second session starts from 9:30 to 9:50. The third session starts from 11:30 to 11:50. And the final session is during 1:45 to 2 o'clock after the market close in the afternoon. All the contracts now listed on the exchange are applicable on the block trading market. The block trading system accepts the order with a single product and order of a combination of products. However, all the orders is subject to limit order only. We plan to launch the block trading market soon at the end of this year or early next year. The TIFAX would like to implement any new reforms or policies regarding market as long as they meet the investors' need. Okay. Oh, it's embarrassing. My time is over. Okay. I will let Mr. Alan Lin from our clearing department to take over the podium for the rest of the topics. Thank you very much.
Very thank you for your patience to listen to our presentations. Here is the first of all, I introduce myself. Now I'm working for a Korean department, the head of the Korean department. So my name is Alan Lin. Today's our presentation is just focused on the hedging accounts and the non-hedging accounts. So Mr. Tay just finished his presentation. Today we just received our approval letter from our regulator. So right now we just only published recently. We will announce this information to the public. So later I will give more time to ask the questions. I think everyone come here to hope to know more about our new policy and our implementation is the next step. So here I want to quick review of my presentation, just the Korean new policies. So I'm very glad to have this opportunity to get together with all of our distinguished guests. So I want to introduce to you the TIFAX adjustment of our new Korean policy and the new product. That's my cover here. And to make everyone knows our TIFAX, the goal and the perspectives. First of all, I would like to introduce the following measures. I think those measures are very important for us because we have the past 10 years for establish our company. So now we want to make some reforms. I hope everybody just shares our experience and discuss here. So first page. First of all, here I want to talk about the collateral as margin deposit. And the second is the implementation of the span to the end investors. A certain modification of the final settlement and day and the price, and the cash settlement for the stock option, and the reduction of the transaction tax. This is a very important issue. I think everybody is very interested in this issue. And the last one, implementation of the TCP and the IP. The second part, I will cover the new products. Okay, so we move to the next slide. I think the collateral is as the margin deposits. We do list study and try to implement the list systems take much time to negotiate with our local FCM. When we touch these issues, I think all the FCM is very worried about their interest income. So right now we have the chance since last year we started to negotiate with them, the pensioners, until they make a note, they consent our proposal. So this early years we started to make study, and we try to launch the new policies in November. So right now we just already get I think a consensus from our we call our regulator after financial service commission. So right now I think this is very important. The further the movement for our company, because most of our investors has to invest on the stock market, cash market. So they has a lot of stock in hands. Right now they can use these tools. We call it security collaterals as the margins. They can reduce their cash deposit. So right now they can make the effective use of their capital. And then we hope the foreign participants that come to our markets, most foreigners, they just invest on our stock market. So they still have a lot of the stock in hand. So right now, if we implement these systems, I think it's good news for the people who has the eligible securities and trade our futures products. And then regarding to the operation the principles, right now everyone want to use these policies. First of all, they need to talk to the FCMs. So they will contract with the FCM. We adopted two steps. One step the transfer procedure. The second, the two transfer procedure. What's the difference? Those procedures I will talk about it in the next slide. And then the investor can use the eligible security as margin deposits. I will introduce what kinds of eligible securities that will be utilized by the investors. Next page. So I just mentioned is the one-step collateral transfer procedure and the two-step collateral transfer procedure. One step means the investor can use this system. In the legal terms, there's still two steps. Taifax still fetch to the FCM. FCM fetch to the investors. But investors can deposit their securities directly to the Taifax. Okay, but this security only can be used by the investors. Less the idle or access the securities cannot be utilized by FCM as the others, the investors, the open interest. So this we call a one-step collateral transfer procedure. The two steps in the legal system, we still keep the two steps. The first one, Taifax fetch to the FCM. FCM fetch to the investor, but deposit their investors securities they still put into the FCM account. FCM if can keep this security, or they can utilize these securities. If they want to utilize the securities as the margins, they can, deposit to our account, Taifax account. So we call it two steps. So that's the difference. So when any of the clients want to use these policies, they need to sign a contract with the we call it FCM, and the FCM will make the clients more understand what's going on, the one-step procedure and the two-step procedure. Last we we depend on the FCMs to how to explain to their clients. Okay, so let's recall all the process of the collateral securities. Next page. Now I'm talking about the eligible securities. The eligible security we call government bonds. All the national government bonds will be used as eligible. And for most other bonds, that's the local. We call the local foreign papers. Now only the two kinds of the issues. The one is the issued by Deutsche Bank. The other one is the BNP Bank. So only the two shutters that can be used as our eligible securities. The third we call a specific stocks. The stocks only can, apply to we call the Taiwan 50 index. And now TAIFAX, the stock options, the total only the 57 stocks can be utilized. Okay, that's what we call eligible securities. The applicable haircut. Now the government bond, 5% on market price. The Formosa bonds, the 10% on market price. The third one specific stock is the 30% of the daily closing price. We will mark to market every day, okay? But during the margin calls, the investors still need to pay the cash. That's what we request because we cannot immediately during the trading period to calculate every details about the mark to market of the price. So the margin call, we still, request our clearing members pay the cash to us. Okay, the pledges, the maximum 50% of the clearing margins. But next year we are making studies. Maybe will increase the percentage, but not yet decide. After the launch in the November, I think we will start to make a tentative proposal to our regulator. Maybe we will increase this one. Okay, so let's. I'm talking about our collaterals on margins. Next page. The implementation of the SPAN to the end investors. I know that last year's October, we already implemented this system to our clearing member and the FCMs. I know most of the FCM very enjoying this kind of system. And the list system, everybody knows almost you use all of the words, more than the 50 exchanges use this system. But TAIFAX has very lucky. The last years we started launching. But before we started launching these systems, I know everybody will get some information from you, probably your FCMs. They just very, try to boycott us because this the system. We're still, reduce the layer interest income. But now it's better for our FCM. But this years we want to implement it down to the and the investors that affect so much on their income interest, but we still overcome the difficulties, and now the FCM still concerned our list implementations. Okay, so SPAN system, but now we use this system still we call it contractual relationship, because the FCMs, the clients, they can choose to use the strategy-based margin or the SPAN margins. But SPAN margin, just I mentioned, but strategy-based margin, just we call the traditional calculation margin. So I just talk later. Next page. Now any of the clients that can choose. He want to use the SPAN system, but when they choose the SPAN, they need to get permission from the FCM. So that's the negotiable. Right now, why we just use this this the rule and this the policy, because everybody knows the span is very complicated for any investor to understand. So not easy to understand. So we need to, reduce the dispute between the FCM and the clients. So if you want to adopt the span margins, the FCM must make clients to fully understand what's the span system. And when meet the margin call, how to process this procedures, and how to close out the positions, and how to call the margins. So that's we want. I'm sorry. Yeah, go back. Span. Yeah. So here is the very complicated. So we need to, make clients the more understand what's the right and the obligation. But the traditional is the calculation is the methods. Everybody just follow the rules and follow the typefax, the announce, and the printing, all the deductions, the methods. You just follow the rules. You can use the traditional. We call it strategy-based margin calculation. So if you don't use the span, use any of the clients that still can use this one. Okay, so that's optional, not mandatory. Next, modification of the final settlement day and index future and options. I think is that most people is very interested in this topic and these issues. But we in the past histories, we modified 4 times. But that's only the slight changes. The settlements, the sampling, all the time zone. That's all. But right now, this time, we will do the big changes because we want to move the settlement day to the combine with the last trading day. So that's very big changes. I think everyone just very interested in this topic. But why we need to do that? Because we have some reasons. The one, sometimes all the investors just complain to us because they don't know why, after the trading days, the next days, the final settlement price, just up and down, very huge. They were hurt. They're holding position. So they just complain this mechanism to us. So let's say it's a very big the dispute between the FCM and our clients. So FCMs they still suggest push us to change this rule. So right now we want to change this, but I think everyone probably get this news. Our Financial Service Commission has released this information to the public. So we want to change the day the same as the last trading day. That's what we want to do. Next page. We're talking about the price, settlement price, the original settlement price. The first, right now we use the 15 minutes, the volume weighted averages of each component, the stock price in the index on the final settlement day. But now we want to move to the mechanisms. That's the mechanisms that we call the same, simple arithmetic average price of the underlying index within the last 30 minutes prior to the close of the trading on the last trading day. So that's the big difference. But why we use this system? Because there is a very simple procedure. It really increase the transparency. Everybody, the price will be disclosed by Taiwan Stock Exchange on the screen. So you can know every minute what's the index, the price. And you very easily, easy verification, because you add up, divided by the 26th you can get the result, the final price. And not easy to manipulation. Everybody knows that it's the arithmetic is the methods, not easy to affected by anyone. But we use the past is the method. We don't know how to calculate it. So every time the investor always ask how get this the price and how to, not easy to calculate. And then someone probably use the, bigger volumes to influence the price because the volume weighted. So right now the weighted is the the index the same. So not easy to manipulation. So that's why we want to change it, okay? This topic is that we're talking about a stock option, the cash stock option. So this is the practice that we still need, change because the trading volume is very thin. It's cool that all the market, market maker participants. Right now, the individuals, the participant is the market. Every day trader own probably is only the 2 contracts. So the individuals doesn't like buy and sell list contract. So right now we need to do some change from the physical delivery to the cash settlement. But the physical delivery is because for any investor, if they hold the positions, all the sell the positions, especially for the sellers, they need if they want to participate in the settlement, probably they need to prepare to set up the cash for the deposit and buy the stock, prepare for the settlement. So that is very high cost for any participant. So right now we need we change it to the cash settlement. It's better for any investors to understand and utilize the cash, we call it capital efficiency. And we choose the final settlement days that we want to move to the last trading day. But the trading hours, right now we move to the 8 to 45 a.m. to the 13:30 p.m., okay? That's the trading hours at the last trading day. And the settlement price, we use the 56, the transaction price. But people probably wonder, 1 hour, why you get a 56? Because the last 5 minutes, we use the option. So only one price determined by auction. So 5 minutes just come out one price. So totally, 56 samples will be used. Okay, so this is we call it stock options that we still want to change. Next. The reduction of the transaction tax. That's the issues that we're talking, so long. Every time that we touch this issue, probably you will get answers because this is not decided by Taifax. This is decided by all the senators in legislative yuan. But this the bill amendment. I mean, this amendment bill has passed by our senators in legislative yuan. But it's the case. Just to submit to the Ministry of the Finance, they request them to make a tentative tax rate proposals for later study. But right now, I think it's the Ministry of the Finance already make their proposal the range around 0.004%. They want to reduce almost 60%. But I think it's our National Futures Association is not happy with this number. They hope that they can reduce more. Probably they want to hope they can reduce to the 0.001% from 0.01% for the future, transaction tax. But now still, negotiating is between, futures industry and the Ministry of the Finance. But I think it's the last, the result probably come out around the range. Okay, that's for our But this is the good news for any other participants because you can reduce your all-in cost. Okay, next page. Implementation of the TCP and IP. I think this is very mature and well-known as the mechanisms, the protocols, the currentries. I think our companies want to implement these systems. They can show the transmission speed and the time. So we estimated we want to implement these systems around the end of the year. So probably we can make your transaction more efficiently and more quickly. The last one I'm talking about the new products. Okay, the new products right now is very very tough and very challenging. Not easy to come out. It's, the new product is we call the rising star, but according to last year's, according to the WFE, they're talking about what kinds of successful products. The successful products, every exchange just pursue the seeking, but according to their definitions, they defines the successful products. Probably is daily trading volumes that exceeds the 1,000 contracts. Okay, we look at this. The number is not very hard, but for the exchange, not easy because we proposed a lot of the products just to fail. We trade one or two contracts. In our exchange, we still have this problem. For instance, we have the MSCI product, US denominated, or we have some interest rates products. So they're trading very thin, very low volumes. So it's very, especially for our business development departments, every day they will, think how to, provide the good and the new product has the potential products. But in our companies, the next year probably we want to propose the 2-3 kinds of the product. One is the gold option. Next page. The gold option is I know the gold is very familiar for us because in Chinese community, everybody very favor these kinds of products. So in the early years, we launched our gold futures. It's quite success. The daily traders around 22,000 per day. So succeeding to this success the products. So next year probably we want to propose the gold options. That comes from our FCM proposal and our investors. They give us some ideas that maybe we need to launch the gold option. The gold option, the contract size, this for your reference. Maybe we want to launch it around the Lunar New Year's because everybody happy. They have more cash. You can buy this kind of gold option. Okay. Next page. Next. We're talking about the single stock futures. Yeah, the single stock futures. We're talking about this. The new products is still a very long period. But right now, I think as we get some consent from our Taiwan Stock Exchange and the Chinese broker and the dealer association, or even the security industry, they support this single stock futures that can be launched in our exchange. So next year we want to propose the products. If we launch the product, it's good. Probably is. I think it's has a lot of potential, and will become our rising star. because right now we have a single stock warrant and the single stock future, and we have the big cash market. So we expect this so much. Okay, this last one. I'm talking about the MSCI Taiwan Index futures. Right now, everybody knows that our U.S. dollars, denominated is the MSCI is very poor and very lousy. The contrast, the contrast not very huge, not very high in everyday trading. So right now, probably we want to change it to the NTD dollars, the denominator. But still, this is not yet decided, but we just hope that can get some the sound from all the participants, because you are the foreign participant. This kind of could be, become our potential products. If you have any queries, that maybe you can give us some advice or some suggestion. We're just waiting for you to song. Okay, so last one is that we're talking about the outcome out. The conclusion is here. So I want to talk to everyone. Is the Taiwan still need, everybody is the participant. Then we all hope we all exchange will become more diversified and more cost benefit to our clients. So next year we hope we focus on the hedging. So next years will become our hedging products. So our people here can answer all your questions. So very thank you for your patience to listen to my presentation and Mr. Tay. So we come here and stand in front of you to answer all your questions. If you have any other questions that you cannot, ask here, maybe you can give us the mail, or you just contact our people around your sitting. So we hope we enjoying this presentation. Thank you a lot.
We'll now take a 20 minutes question time. Please feel free to ask us any question. We have all our full staff here. We have the business development, trading, clearing. So just raise your hand and we'll pass the microphone to you. So anybody has any questions? No? Yeah, please.
Hi, good morning. Question on single stock futures. How many stocks are you targeting for the first batch of single stock futures?
Right now, I think we will use same as our single stock options. The single stock option only the 30 kinds of stocks. Yeah. At the beginning, probably next year or get more familiar with the products. Probably will expand our underlying stocks.
Let me add something to our institutional hedging account. Our FSC, our Financial Supervisory Agency Commission, has just approved our new rules for hedging accounts. So if you like, you can contact your FCM next week and apply for the new hedging account. And our exchange will subsidize some expenses for the account opening. Because you open a hedging account, you have to apply from our TDCC to transmit the market values of your securities holding, and you have to pay about 12,000 NT dollars for the annual fee. And then the TaiFax will pay for it for the first year. And if you have trades in your hedging account. Normally, we charge the fees to the FCS. We will reduce 50% of those fees. And if you like to transfer all your positions from your ordinary account, your non-hedging account, to your newly opened hedging account, and our exchange do not charge any fees. Thank you.
So it's a good news for everyone here.
If there is no more question right now, just feel free to ask us a question anytime. And we'll have a luncheon by Mr. Steve Wang, our president, at 12:30. Before that, we'll have a presentation from the SVP of Taiwan Stock Exchange, and she's going to give you some updates on the stock market as well. So we'll now take a 20 minutes or 30 minutes break, and just feel free to ask us questions anytime, if not here. Okay. Thank you for coming today. Thank you.
Thank you, everyone.